Welcome back to Talk Tickers, everyone. Today is October 30th, 2024, and we're going to be taking a deep dive into Dayforce's Q3 2024 earnings call. We've got the transcript right here, along with some stock performance data and some related news articles. What's the headline grabbing your attention?
Well, their stock is up over 7% today, which is pretty remarkable considering all the economic headwinds. Investors are seeing something they like. Dayforce trades under day on the NYSE, and they're a big player in the human capital management space, or HCM for short. They provide solutions for things like payroll, benefits, talent management.
Okay, let's break down these numbers. Dayforce's recurring revenue is up almost 19%, and that's the bread and butter of any SaaS business. Their total revenue also saw a healthy jump, over 16% higher than the same period last year.
And their full-year projection is fascinating. They're expecting 21% growth. It seems like they're not just weathering the storm, they're actually gaining momentum.
Absolutely. And it's not just growth for the sake of growth. Their adjusted EBITDA is up. Margins are expanding, and they're converting more of that into actual cash flow. It looks like a clear focus on profitability.
And that's crucial. In a volatile market, investors really prize companies demonstrating both growth and financial discipline. This uptick in adjusted EBITDA, which essentially measures their operating profitability, tells a really compelling story.
There are a few other bright spots, too. Their Dayforce Wallet, which gives employees access to earned wages early and helps them manage their finances, is on track to more than double its revenue this year.
And if we connect this to the bigger picture, we see the increasing importance of employee financial wellness. It's becoming a key differentiator for companies. And Dayforce seems to be capitalizing on that.
They're definitely attracting some big fish, too. This quarter saw several significant client wins across diverse industries, including a multi-brand Australian retailer and a global manufacturing leader.
These wins are more than just headlines. They demonstrate the appeal of Dayforce's platform, especially in a market where businesses are looking for integrated solutions to streamline their operations.
And they haven't let up on innovation either. New product releases like Dayforce Learning and the addition of cashless tips in the wallet indicate a company that's not content to rest on its laurels.
That's key for listeners. To maintain an edge in the dynamic HCM space, you need to constantly innovate and anticipate your clients' needs. And it seems Dayforce is doing just that.
They've even provided a glimpse into 2025. Early projections show continued growth and profitability. Total revenue excluding float is estimated to rise between 14% and 15%, and an adjusted EBITDA margin above 31%.
While this initial outlook appears promising, we must as always examine the finer points. Let's delve into what might be giving investors pause.
Good point. The overall picture seems rosy, but there are a couple of interesting points that warrant closer examination. One is the extended sales cycle they mentioned. Deals are taking about 25% longer to close.
That's a significant increase and could potentially impact their revenue projections. What did Dayforce attribute this delay to?
Well, they pointed to a couple of factors. One, the complexity of their platform. Remember, it's often replacing multiple systems for clients. And also a more cautious approach from companies due to the economic climate. Basically, more people are involved in the decision-making process, and they're taking longer to sign off.
That makes sense. Larger deals, especially those involving core system replacements, typically have longer sales cycles, and economic uncertainty can definitely make businesses more risk-averse.
Another factor to consider is the potential headwind from their float revenue. While they expect it to exceed expectations this year, they're predicting it'll become a headwind in 2025 as interest rates decline.
You see, listener float revenue is a bit tricky. It's generated from holding employee funds, and it's very sensitive to interest rates. Right now, with high interest rates, it's a bonus for Dayforce. But as those rates fall, it's going to put a dent in their earnings. How they manage this shift is crucial.
But even with this potential headwind, they seem confident about hitting their profitability targets. They emphasize their focus on operational efficiency and scaling, suggesting these will help offset any impact from float revenue.
That's reassuring. It indicates they're proactively addressing potential challenges and have a plan to maintain profitability even as some revenue streams fluctuate.
So what does all this mean for Dayforce and for the HCM market as a whole?
From what we're seeing, Dayforce appears to be navigating the current economic uncertainty pretty well. They're concentrating on growth areas like their wallet and making strategic moves to enhance profitability.
Their emphasis on the Dayforce platform, particularly its AI-driven features like the Copilot, suggests they're aiming to be at the forefront of innovation in the HCM space.
Speaking of the Copilot, that's something I want to dive into a little deeper. This Copilot could be a game changer. Imagine an AI assistant that not only helps employees, but also gathers data to help companies make better decisions. It's like giving every HR department a crystal ball.
Okay, confession time. I geek out on AI, and this Dayforce Copilot color me intrigued. It's like they're taking a page from science fiction and bringing it to the office. By integrating AI into their core platform, they're not just adding a flashy feature, they're adding value for existing customers and creating a compelling reason for new clients to choose Dayforce.
And the success of their wallet product is also notable, especially as the financial well-being of employees becomes a bigger focus for companies. It's no longer just about providing a paycheck. Companies are realizing that supporting their employees' financial health leads to higher engagement, productivity, and retention.
Dayforce seems to be hitting the mark on that trend with their wallet, offering features like early wage access, savings tools, and financial education resources. You're probably thinking, okay, strong growth, cool AI stuff, but what about the competition? And you'd be right to ask that. The HCM market is getting crowded.
That's right. Dayforce faces competition from a wide range of players, from established giants like SAP and Oracle, to nimble startups focused on specific niches within the HR tech landscape. This means Dayforce has to stay agile, constantly innovating, and refining their go-to-market strategy.
One way they're doing that is by focusing on the mid-market and enterprise segments. They're not trying to be everything to everyone. They're targeting companies with specific needs that their platform is designed to address.
It's a smart approach. By focusing their efforts, they can better understand their target audience and tailor their solutions to those unique requirements. And let's not forget the ever-changing regulatory landscape. HR and payroll are highly regulated areas, and those regulations are constantly in flux.
It's a complex and dynamic environment, and Dayforce needs to ensure their platform remains compliant with all applicable laws and regulations. Failure to do so could result in significant penalties and damage their reputation.
Absolutely. They've invested heavily in building a robust compliance infrastructure and have a dedicated team of experts who monitor regulatory changes and ensure their platform remains up to date.
We've talked about declining interest rates and their potential impact on float revenue. But what other macroeconomic factors could come into play? Could a recession or a slowdown in economic growth throw a wrench in Dayforce's plans?
That's a valid concern. A recession could lead to reduced hiring and decreased investment in HR technology, which could impact Dayforce's growth prospects.
However, it's worth noting that Dayforce's business model is relatively resilient to economic downturns. Their recurring revenue stream provides a level of stability, and their focus on helping companies improve efficiency and reduce costs could make them even more attractive during tough times.
That's an important point, their value proposition. Streamlining HR processes and automating tasks could resonate even more strongly with companies looking to cut costs and improve their bottom line.
So while there are definitely risks and challenges on the horizon, Dayforce seems to be well equipped to navigate them. Their strong financial position, their experienced leadership team, their commitment to innovation, and their customer-centric approach give them a solid foundation for continued growth and success.
I agree. They're a company with a clear vision, a proven track record, and a strong understanding of the evolving needs of the HCM market. They're definitely a company to keep on your radar.
Now let's take a closer look at some of the key takeaways from this earnings call and what they signal about Dayforce's future direction. One thing that struck me was their emphasis on the Dayforce platform and their commitment to building a comprehensive suite of solutions. They're aiming to be a one-stop shop for all of a company's HCM needs.
It's an ambitious goal, but strategically sound. By offering a unified platform, they can provide a more seamless and integrated experience for their customers, which can lead to greater efficiency, reduced costs, and improved decision-making.
And their focus on AI is a key differentiator. They're not just adding AI features for the sake of it. They're using AI to solve real-world problems. And create tangible value for their customers.
The Copilot is a prime example of that. It's a practical application of AI that can have a meaningful impact on employee productivity and engagement.
And their early guidance for 2025 suggests that trend will continue.
They're also a profitability story. Their focus on operational efficiency and scaling is leading to margin expansion and strong free cash flow generation.
And let's not forget their track record of innovation. They're constantly investing in new technologies and developing new solutions to meet the evolving needs of their customers.
They also have a customer-centric culture. They're focused on delivering a positive experience for their customers, and that's reflected in their high customer satisfaction ratings.
And finally, they have a strong leadership team. Their CEO, David Ossip, is a visionary leader, passionate about the HR tech space, and has a clear vision for the company's future.
So for investors looking for a growth company with a solid track record, a commitment to innovation, and a solid financial foundation, Dayforce is definitely worth considering.
But as with any investment, it's essential to do your own due diligence and make sure that Dayforce aligns with your investment goals and risk tolerance.
One question that's been on my mind is how Dayforce's acquisition of Illumi is playing out. They're integrating it into their platform, but it's still early days.
It's definitely something to keep an eye on. Illumi was a strong player in the learning management system space, and their technology could be a valuable addition to Dayforce's platform.
They mentioned that Illumi added about 170 basis points of growth to their Dayforce recurring revenue, excluding float, in the third quarter. That's a noticeable contribution.
It suggests the integration is progressing well.
Yeah.
And that they're seeing early success in cross-selling Illumi's solutions to their existing customer base.
It'll be interesting to see how they continue to leverage Illumi's technology and expertise to enhance their learning and development offerings.
Speaking of expansion, they also discussed their global growth strategy. They're already operating in several countries, but they see significant opportunities to expand their footprint further.
That's a smart move. The HCM market is a global one, and Dayforce is well positioned to capitalize on that. They have a platform that can be easily localized for different markets, and they have a proven track record of successfully expanding into new territories.
They mentioned some of their recent international wins, including a large Australian retailer and a global manufacturing leader. Those are encouraging signs that their global strategy is gaining traction.
It'll be interesting to see which markets they target next and how they adapt their go-to-market strategy for different regions.
Another area I'm curious about is their approach to pricing. They're known for their premium pricing, but they're also facing increasing competition from providers with more aggressive pricing models.
It's a delicate balancing act. They need to maintain their premium positioning while also ensuring that their pricing is competitive. They talked about their focus on delivering value to justify their pricing, and that's a key message to reinforce.
They highlighted the value of their platform, the comprehensiveness of their solutions, and the expertise of their team as key differentiators that justify their pricing.
It's a message that will resonate with companies seeking a best-in-class solution and are willing to pay a premium for it.
And they're also offering more flexible pricing options, including subscription-based models and value-based pricing, to appeal to a wider range of customers.
That's a smart move. It allows them to cater to different budgets and needs without compromising their premium positioning.
So overall, Dayforce seems to be striking a good balance between pricing and value. They're not the cheapest option on the market, but they're offering a premium solution that's worth the investment for companies serious about HR.
It's a strategy that's been working for them, and it's likely to continue to be successful as they expand their platform and their global reach.
Okay, before we wrap up, I want to touch on one final point. They didn't talk much about it on the call, but I'm curious about their plans for addressing the talent shortage that's impacting so many industries, including the tech sector.
That's a great point. The talent shortage is a real challenge for companies of all sizes, and Dayforce is no exception. They're a growing company, and they need to attract and retain top talent to continue their momentum.
They've spoken in the past about their commitment to creating a positive and supportive workplace culture, which is crucial for attracting and retaining talent.
And they're also investing in programs to develop their existing workforce and create opportunities for internal advancement. They understand that investing in their people is one of the best ways to address the talent shortage.
It'll be interesting to see how they continue to evolve their talent strategy as they grow and expand.
Absolutely. It's a critical area of focus for any company, especially for one operating in a highly competitive market like HCM.
So to sum it all up, Dayforce's Q3 earnings call was packed with positive news and encouraging insights. They're executing well, innovating rapidly, and expanding their reach both domestically and internationally. They're a company at the forefront of the HCM market, and they're well-positioned for continued success.
They're definitely a company to keep on your watch list, and we'll be following their progress closely.
That's it for this episode of Talk Tickers, where we took a deep dive into Dayforce's earnings. We hope you found it informative and insightful. As always, we encourage you to do your own research and make informed investment decisions. And we'd love to hear your thoughts on Dayforce and the HCM market. Connect with us on social media and share your perspectives. Until next time, happy investing.